It's the weekly 30/30 trading list on the ASX. We're reviewing the top 30 momentum companies and the companies that have had the best momentum improvement this week, what we call the 30/30 list. Gary Glover has been through both of them and pulled out his favourite charts to look at to show us where the opportunities are, where the best runners have been, and some insights as to where the driving forces are coming from on the market today. Good morning, Gary. How are you?
Yeah, I'm great, Chris. Great.
Happy to hear before recording you said you're pretty happy with this list. There are a fair few lessons in there, and you might share them with us along the way as you're going through the charts and pulling out the highlights. So when you're having a look at the quarterly momentum list, the companies that have had the best momentum on the ASX over the last quarter, what's standing out to you in this top 30 list?
Yeah, it's just some really good lessons actually in the list as well. So there's a few on the list to keep an eye on as well, as to monitor. And yeah, there's some really good, some cracking, some good VCP, some great cover and handle setups. So some really good technical lessons and setups in this list there. So yeah, it makes me. I mean, I've sort of Christian Kalamagi. I'm not sure if I'm sure most people know who he is, but if you haven't, he's one of the best momentum traders going around. Obviously, quite well known, and we've mentioned he generally trades the top 2% of the stocks there. But I saw a quote here from him during the week. I think it was like, "I want to see higher lows, tightening ranges, and relative strength. Cut 99% of the things that don't matter out, and your trading results will improve." I thought, it's a pretty simple sort of comment there, but that is so relevant to what we're covering here, Chris, as well. So we really want to be looking for those relative strength. We want to be looking for the ones that have, been building something here, showing strength versus the market, and then looking for that tightening range. One of the things that if you watch in his videos, he says one thing over and over again. He goes, "Wide and loose is for losers, tight is for winners." And see if I can apply that today in we go through some of these charts here. So number one on the quarterly list is SHN. So it's had a bit of a pop here. Big rating score there. Good volume there. Pull back on sort of lighter volume here. Just a little bit. It's probably not tightening up here. So coming off pretty impulsive. Much of that volume's drying up here. Probably one just to keep an eye on rather than jumping in there. Plenty Group's had a bit of a pop there, just starting to tighten up a little bit here, so probably just another one just to keep an eye on there. Goes probably on our watch list rather than on our to-do list. And TGC number 4 as well, so in that gold sort of sector had a bit of a big jump here, but some pretty strong volume there. So probably just need to sort of see some sort of pause and some sort of tightening up there. So there's a few there just to sort of monitor here. 40X is pretty interesting here, Chris, number 9. This is sort of one that had the game changer trade here, had the big positive news there, sort of which I consider game changer for the stock. It's had a bit of a run up, bit of a pullback there, and then March sort of high here. Just had a bit of a pause here recently. Big volume into the high there, but that's pulled back on pretty light volume. Come back into that 10-day. So I sort of Kalamagi talks about the strongest stocks will hold the 10. Most of them come back to the 20, but the strongest sort of hold the 10 here. So pretty interesting here that we've actually pretty light volume on this little pullback there, and we definitely have held the 10 here. It's pretty interesting here. So again, this looks okay to me. Probably one of the better ones that's held on there. I still do think that is an important change for the company there. So generally those sort of stocks like that in the past there, we saw like NEU, had the bit of a game changer there. It's had a bit of consolidation, a bit of a run, a bit of a consolidation, consolidation, another run, still sort of consolidating here so far. So like these ones here, they can continue to run here. So got to have your stop in place, of course. But something like that, you might probably drill into the shorter time frame to have a closer look. That still looks pretty good to me. WML, thought this is pretty interesting here, just because it's had a big jump here, Chris. Good volume through here, and then what we saw here in the pullback is we saw really light volumes in here. It sort of pulled back here, came back sort of past the 10, but maybe back near the 20. Had a bit of a bounce up here. I think this is actually sort of something to keep an eye on with these sort of smaller stocks, is that they run hot on pretty big volume. They have a bit of a cool off. It's okay to see maybe one day of selling here, but if you don't sort of see too much other selling, dries up, that's what you want to see. Generally, they'll have a little pop up, like a one-day pop like this. Then they might drift off again. And this is probably the better sign here. So rather than trying to pick this thing off the 10 or 20 is always a bit risky. You're better off to have a little bit of a pop, and then it consolidates there. You'll find actually after that one-day pop, the next 2 days, 1, 2, it pulls back here, but there's no volume here. Now that's what you want to see. That's a good sign that no one's selling this. That'll give you a little bit more comfort if you're looking to sort of try and buy this in the short term. So I know it's only a small stock here, but that is a really good signal there. It's just to have that pullback, whether it comes back to the 10 or 20, but to have that one-day bounce and then drift back again here, that's a good sign there. So if you look at that's WML, DCC, which is WML is number 12, DCC is number 14. Similar sort of style here too. We had pretty good volume through here. Again, we saw a little bit of, I think there's one volume bar in here, but then it pops up a little bit here, and then it goes 1, 2 days down again. So after having that little pop off the low, it drifts back here, and again, no selling, just 1 or 2 days. So again, it tells you that no one's selling the stock here. So just sort of something to sort of fine tune with these momentum stocks is to have the hot run, have the pullback, only 1 day of selling. We don't want to see any more selling. So have that 1 day up, and then they drift off for a couple of days, and we don't see the selling come in. Then that's a bit more confirmation that that no one wants to sort of sell the stock here. So just sort of something just to fine tune there on these sort of stocks there. And then you can look for sort of an entry there. Again, probably drill into your shorter time frames, maybe like a 30-minute chart tonight. But yeah, just thought that was interesting there. Just, we're starting to sort of follow these stocks. Even the smaller ones have sort of got the same sort of pattern occurring over and over again, Chris. So yeah, pretty interesting here. The CYL, which is the gold stock there. So this one's continued to run there. If you remember back here, had the nice pop there, some pretty good volume, tightened up here, had a little VCP in here, Chris, and then popped up here. I think it's good to recap this sort of stuff here as well here, because this was a good little signal here. Then what happened was this sort of faded back here. Okay, so some people might have a rule that, if it cuts the 10-day, I'm out. Some people might have the 20-day, I've cuts the 20-day, I'm out. Some people might give themselves more room back at the low or the 50-day. Okay, the reason I bring this up is that there's actually no right or wrong answer with any of those. What's right is that you apply the same process each time over and over again. So I mean, if you stopped out on the 10, you would have kept it pretty tight. If you stopped out on the 20, you would have got stopped out, probably less tight, so bigger loss. If you were the 50, you would have probably stayed in the trade. Okay, so, but this is just one stock here. Another stock might have just kept going here. Someone with a 10-day moving average there, they might have had a slightly larger position because their risk was a lot narrower. So, and if it hadn't pulled back and it kept going, they would have made a lot more money. Whereas someone with a bit more of a wider stop here is probably having a smaller position on and not going to have as much risk on to make as well. So what I'm trying to sort of say here is there's no, people will look at the stock and go, oh, should have had it here. Okay, here. But you just don't know what's around the corner here. So you don't know how far this is going to pull back here. What's most important here is not whether you get stopped out or not. It's whether you build a nice process there that gives you a bit of an edge over the longer haul. And over time that process works as well. So, I think I got stopped out of this position here, but that's my process. So I'm pretty comfortable with that. I probably could have gone back into it. That was probably, pushing back above the old high here would have given me a chance to sort of come back in here, which I didn't do. So just important to have a process and stuff there with these things here, and stick with that. And I was talking to Chris earlier about this, because when we review our trades, we the thing that you look back and see whether you made money or lost money or how much you made. And that's often how we sort of measure a lot of trades. And that's actually the wrong way to measure them, because really sort of we should basically go, has it met all our criteria? Did we sort of, did we scale into the trade the right way? Did we get did we manage the trade the right way? Did we, follow our rules in terms of trailing the stop? Do we get ourselves to break even after it's maybe moved one unit of risk? Because that's our process there. Are we, doing whatever your rules are there? Have you followed them all along the way? That's more important than actually I made $2,000 or $5,000 or $8,000 or $12,000. It's the process that you followed actually is the most important thing over the sort of money that you make there. And I think we're too quick to sort of jump in and look at our dollars and cents. It's more important actually with the trading here. We build a good process, and sometimes it's just law of probabilities that every trading in the zone there. Sometimes it's just a numbers game. So sometimes you get stopped out. Sometimes it'll come back within 2 or 3 cents. You're like, bugger. Stop out within 1 or 2 cents and keep going again. Again, that's the process. So you'll find maybe 80-90% of the time, those tighter stops there will probably you'll get stopped out more often, but the losses will be smaller and your wins will be bigger. But someone who goes for less of a wider sort of stop, they're probably going to trade smaller, so their losses might be smaller, but their stops are probably going to be less frequent. Okay, so there's no winning. There's no right or wrong there. It's just basically what you sort of identified there. What's most important is consistency in what you're doing there. Don't go changing your rules after one trade breaks your stop by 2 cents or something gaps through. They just keep following, tweak the system rules there, trying to review every quarter and see what you're going to improve on there and make the adjustment then rather than each time a trade gets moved here. So I thought this one was interesting too. Clearview, CPV, it's had a pretty nice run there. Had a good breakout of this little consolidation there. Nice little, stayed nice and hot. Nice little cup and handle in here, Chris. Sort of stayed pretty tight. Again, this is sort of pretty impulsive move. Goes sideways. Little cup and handle here, and then breaks through here. And geez, we had good volume here basically the day before, and the day of the break as well. So that's pretty good signal there. Stayed pretty robust through here. Good rallies there. Again, look at that volume dry up here. The volume's gone again here. A little bit more selling, a few more heavier days in there. So still tightening up here again. So can't rule this out again. But it's probably just not. There's a bit more selling in here than that. Look how much selling there was in there. Not much at all. So we're definitely seeing a bit more selling up here. But still have one more move potentially. But it's just less. This is the better looking setup here. It's nice and tight here. Okay, so loose is for losers, tight is for winners. Okay, so we want to basically see those nice and tight price action, nice and tight volume. That's what we're looking here.
Well, that's something you and I have been looking at in the reports. A different report that we've been covering together for a couple of months or maybe a couple of years now, is the coils, where we're consistently filtering for those tight compressions, and that's what you're filtering through these lists as well, isn't it? You're looking for that compression, that coil, the tight movement.
Yeah. So look, there's another one here. Look at this. This is FND. That's number 20 on the list there. So Findy. So this has had a pretty, it's obviously sort of come out of a bit of a, you call this a VCP sort of pattern here, but it's bit sort of a sketchy sort of break here. Pretty choppy, lightly traded here, but now it's starting to get a bit more liquid. Now it's had a bit of a run here, so nice impulsive move here, and now the whole thing's sort of tightening up here. If you look at this little, we've basically got a little flag pennant, high tight flag sort of setting up here, Chris, as well.
Yeah, definitely high tight flag. Yeah.
Yeah, you got a little bit of selling in here. Maybe probably like to see it a little dry here, but what you do see is this is tightening up here. The whole price action there is tightening up here, and that's been an impulsive move on pretty big volume. So the other thing too is that this has come back to our 20-day moving average here, Chris, as well. So just sat on top of that, held here yesterday, and look at them. We're only in the first hour and a half in here, and all that the volume's up here today. So that's actually a really good sign here. So probably should get off and buy this right now. But but that's a good signal.
Well, from a Bukowski perspective, it's breaking the downtrend line after it's been in compression. It's held more than a third of that high flag pole from say 40 cents to $1.30. The retracement's only been held above $1. And yes, if that volume will break out and be the highest for more than 10 trading sessions, and if it closes on its high, that's an entry from a Bukowski perspective. So yeah, by the time this goes to air, we'll see what the share price is at the close.
Yeah, but then that's a good setup here. That's the ideal setup here. So we're looking for that, nice big move, impulsive move, good volume, and then pull back here and tighten up here. See the volume drop in. Probably like to see the volume drop a little bit more. But I mean I think this day in here that was really light there. Had a couple more days there, seen a bit more volume there. Probably like to see it dry up there. Maybe the day of the low, see a little bit more volume. But not good sign here earlier. But we're only basically in here, so early here, we're less than 2 hours in. So the volume's already up here. Probably going to be above the last 6 or 7 days there. So that does look all right. Iris has had a nice little gap and run here. Some good volume there. Again, Chris, this is sort of one that I'm not a sort of. I mean, I've used Iris pretty much every day for the last 20 years. But I'm not a fan of the company there. Sort of, I don't think it made too many innovations here. But this had some pretty bad news there, and everyone was thinking the worst there. I think the update again wasn't as bad as everyone was thinking. It was actually showed some improvement. And that there's a little gap, a little game changer trade there. Everyone thinking that Iris is in big trouble, and its news came out and it wasn't so bad here, and the stock's rallied since there. So there's your little game changer trade there, where everyone's thinking very negatively, and then you end up getting some good news in there. IMU, this one's sort of interesting there. This is sort of this might be sort of similar to the trade we just sort of shed there, FND, except that this has gone up impulsively pretty strong here, but look how much heavier the selling is in here. So we've just saw heavier volume through the sell there. So whereas that's always less preferred than seeing the volume drop. You'd really like to see volume like this, or really light here. So look, still might be okay here. It's had a bit of a pop here, some okay volume again, but it hasn't really got going there. And I think that's when you see a bit more selling come in on the way down, because really you should have the 1 day of selling there, maybe the following day or one of these days here, and then the volume should dry up here. So that's a little heavier than you'd like to see. So that should warn us that trade is not as good as the other ones when the volume really dries up. Okay, so just little things just to sort of keep an eye out there. 24 SUH, a little bit illiquid there, Chris, but not a bad little setup here. This is we've gone sort of sideways here, impulsive, gone sideways, and then wow, this has had a bit of a pop here. A little bit, not the most liquid sort of stock there, but it has pulled back again and just started to turn back up again. So again, pretty small, a bit messy, a bit hard to trade, but not the worst looking chart there. PGC, just want to keep an eye on there. Just two things on here. Big volume at the low, which is almost like, exhaustion of sellers here. So everyone, this is the point where when you see the big volume like this, it's like everyone's just getting out. I've had enough.
It's like capitulation, and then all the weekends have sold out.
So it'll be like, people who sort of got into the story thinking it's a great stock and great story, and then the thing just trends down. At some point, they just give up. And then the point they give up is usually you see big volume. That's why when you see big volume, you've got to ask yourself one of two things. Is this accumulation or is it distribution? And it's important where that volume comes in. So after it's been trending down, when you see big volume there, occasionally you'll see like a big stock, Chris, like maybe a top 300 sort of stock, where you might see something like, say, 5 or 8 or maybe something like 10% of the company's shares might trade in a single day. And that's basically just sort of like, usually the stock's been going down, and then everyone just gives up and kind of panics in the low. And then when you see that big change of hands, that's normally exhaustion as well. That's normally when everyone gives up here. So this is interesting here that everyone's given up here at this point, and now we've started to sort of climb here. Not too much going on through here, but the whole thing's just sort of stabilized, and now we're sort of starting to go here, starting to, so these will be new hands here rather than old hands. And yeah, potentially this might be able to build here. Probably a bit early days here. We're still in a bit of a nasty downtrend, but that volume like that does tell you that in exhaustion there, and that's everyone piling out here, and that's what you sort of want to see, because oftentimes you get sort of sticky, long holding sort of hands there. They're sort of, well, anytime you get a rally there, they'll probably just sort of sell into it. But if everyone's sort of panicked out below there, then you've seen a change of hands there as well. So for every seller that's got out here, there's a new buyer who's coming here as well. So that's just interesting to see that. That is our quarterlies there. So some really good lessons in there. I mean, you've got plenty of sorry, I didn't show the last couple of some of the last 4 names on the list there. You should go back and study those charts there. So 27, 28, 29, and 30, GTK. So again, we saw, this is a leader here, basically. Every time this has rallied here, it's gone sideways into a correction there. It's shown very little weakness. Had a beautiful VCP in here and then popped through the range there. Gone high there. Look, that's a really, really good chart there. ERD, another sort of VCP in here. So it sort of came off the low here. And this little VCP in here, just started to see a bit of volume come in here. This is when you start to see volume come in. Once we sort of broke out of this range here, it's gone with it. Okay, so definitely saw some accumulation coming in here. You might even say this little squared off here, little little VCP in here, and broke out. Once it's broken out here, and just continue to go on. So that's a nice little pattern. Even for like a sort of smaller, probably messier stock, TUA is probably the best chart on here. In that basically we saw this retest the high here. This is our big cup. This is our handle, say nice and tight, and then break through here. So this is, if you're breaking here around 220 here, this has got to 290 here. So it's 70 cents on 220 there. It's like 30% move already. So it's a pretty big move. So still sort of hanging on here at this stage as well. So that's a cracking setup here. That cup and handles here. Unfortunately, we don't see as many of these sort of patterns that you see. You probably see more of them in the States, but we do see a few of them here. If you see those sort of patterns there, that's what we're trying to identify. And I think the catapult was pretty interesting as well. There's a little bit of a cup and handle in here as well, Chris. Just pretty impulsive move here. Some pretty good volume off this low. Bit of a little handle in here. It's almost say a little VCP setting up here. Just showing some real strength there. The whole thing's sort of tightening up, and the whole thing's popped out here as well. So again, a nice little cup and handle set up in here as well. Just sort of something to keep an eye on there. That cup and handle is probably one of the least understood technical patterns. I know for me, it's sort of been definitely something I've tried to work on over the last 18 months. Just sort of trying for me rise myself with a pattern there. If you anyone's got Bulkowski's Encyclopedia of Chart Patterns, that does a really good explanation there of the sort of setup and charts coming out. But cup and is definitely sort of one pattern to do some more homework on. That does tend to show up in the stronger stocks there. Okay, that's the quarterly done there. Plenty of lessons in there. You could spend probably 3 or 4 hours studying all those charts there today, and really get education. That's a great list there. Just what we covered there. Covering the 10 and 20 day moving averages. Tightening up, game changer trades, BCPs, cup and handles there. There's stocks there that have probably had too much selling. There's other stocks that have had that really tight contraction, low volume, and then gone again. So real difference there. So again, that list there, just that 30 there, Chris, you could literally just study that for the next week, and that'll improve your trading by 20-30% if you understand that list really well. So I reckon that's probably one of the best 30s we've seen leaders there. There's just so many awesome lessons in there.
Well, that's a good insight, because I know, talking to a few fund managers this week, they're saying it's been a really hard market, a really hard year for them. It's been hard to turn positive. It's been hard to really maintain inflows and that kind of thing. But that momentum list that you're talking about is actually showing there are opportunities. Admittedly, you said a fair few of them are illiquid and hard to trade, but dissecting those charts and understanding them in a similar way that Bolkowski's done in his encyclopedias, but you've mentioned a few times before in the months past that William O'Neill would do things, and I know you gave me a book of many of his trades, and that cup and handle pattern that you've talked about, he's just looked back over the decades and just found cup and handle after cup and handle for the multi-year leading companies that have had the best momentum. So there's plenty to do there in that list, but I think you've ticked over to the week and found some that have had a good improvement this week on the momentum side of things. What stood out to you in this week's list?
Yeah, lots of VCPs actually. Lots in this list. So some pretty good setups in here as well, and some ones that are actually setting up at the moment here. So, but yeah, they cover a handle. That's probably I've studied everything. I reckon I've studied probably 90% of all technical theories. I've even studied sunspot activity and all sorts of weird, wonderful theories there. GAN timings and all sorts of stuff, seasonal timings, all of us. But the cup and handle's probably been a bit of a weakness of mine, but it's definitely something I've worked on in the last 18 months. And tell you what, some of those setups I've seen in the last couple of years, there's can be some cracking cup and handle setups there where I would definitely just keep persevering, learning a bit more of that. I'm sort of definitely been working on that. So yeah, some great setups there. But number one on the list here was BIO. So Beyond Australia, is it? Bionome Australia, something. So again, nice and little tight here. Some pretty good volume through here, Chris. I know it's a little bit small here, but we've had some pretty good, nice impulsive rally in here. Sort of squared off here, probably just undercut here a little bit. But then started to sort of climb on here, and some okay volume here. It's look a little small here, but has just broken through 52-week high here. So, the little Davis box there, he might be sort of trading this on the close here, even though it's probably a little small. I don't know if it's a leader and stuff there, but definitely pretty interesting little stock there. DUR, again, this is, probably highlighted here just because this is sort of like had a pretty strong trend, overbalanced the trend, which is a bit of a negative. But one thing a lot of these stocks actually have done, Chris, has rallied back into the range, come back to the 50, found support there and gone again. And I've definitely seen this a lot. So from a lot of the stronger stocks have actually sort of had the overbalance there, but then rallied back and then found the 50 and then gone again. So it's just sort of something to keep an eye on there. It's pretty tricky to trade there, but I'd much prefer for rather than try and buy these things. I mean, look, you could argue there's a bit of a VCP in here. It's obviously 1, 2, 3, and then a little tightening up and then a break. So that's not a bad little signal under the 50-day moving average. So not I prefer to see it above the 50 personally. But if every other if every other sort of indicator I look at was telling me to buy this, and I got 6 out of 7, then maybe I might get away with the 50-day moving average there. But I just noticed a few of them have come back to the 50 and then gone here. So tend to get a second chance on a lot of these ones here as well. AVH, number 4 on the list. Vita. So I noticed a few of the biotechs actually having a bit of a run here. So this is sort of pretty negative downtrend there, sort of overbalance as well, pretty big correction there. Had a nice impulsive bounce in there, had a little move up, little tightening and then go. And now starting to sort of build here. So we've sort of got our low, our second high, sort of a 0, 1, 2 pattern here. So this is one just to keep an eye on here. Maybe this will tighten up here, give us a VCP or something like that. But yeah, there's some okay volume in here as well. So this is one just to put on our list to sort of monitor, just because we're starting to see a little bit of breadth, sort of creep in here. But probably like to sort of see this tighten up a bit more. But I've just put that on my list to monitor there. Myers had a nice little VCP as well. Again, probably sitting under the 50-day moving average there, which I don't like, but did see like a lot of the retail stocks have been rallying here in the last few weeks. Like a lot of them popped up pretty high here, just because everyone's been fearing the worst, and the results are coming in probably a little better than everyone's expecting here. So did sort of tighten up in here, and had a nice little VCP in there as well, and then did break through. So that's not too bad there, because that would have been above the 50. Sector was sort of starting to move as well. And yeah, this had a nice little move here. Some good volume through there. So yeah, not the worst stock here. I don't know if it's, I would say, a high momentum sort of stock here, but it wouldn't surprise me to sort of see this sort of keep drifting higher there. On the Maya LOV, this is sort of one that I did sort of see that there was a bit of a VCP in here, but again, a bit choppy, a bit messy. There's some good volume down here at the low here, Chris. Some good volume on that drive. Pulled back here, did see the volume come back in again. I was hoping this was going to just tighten up again, doing like a little third pattern here, but it has sort of broken above here. So, first leg down, second leg down, tightens up, and then breaks through here. So this is probably not a bad sign here. The volume's actually pretty good here. So all these stocks that definitely can move pretty quickly once it gets going here. So again, doesn't look too negative to me. Breaking up through here is a pretty good sign there. Prefer to see them a bit tighter, sort of, and so those wider sort of moves there, hard to sort of get a safe place to stop, So again, loose for losers and tighter for winners. So we want to sort of try and focus on the tighter ones here. One is, this one's pretty interesting here. This had a really impulsive move up here, so 6 cents up to plus 30 here. Had a pullback here, but this thing's just sort of gone sideways sort of since there. So now this whole thing sort of start tightening up here. There's a bit of volume been coming in at the lows as well. So this is definitely one to sort of keep an eye on there. One View Healthcare. So yeah, I've just got this on my monitor list there. It's showing a bit of relative strength, a bit of a VCP happening there. This is sort of this congesting here, so not showing too much weakness there. So that looks okay. RWC, I think this is sort of potentially tightening up here. We've now sort of again cracked the 50 like the last stock here, come back to the 50, bounce support there, and then bounce off. This is definitely something I'm seeing a lot of in this market here at the moment. So makes it a bit hard to sort of trade there, but patiently wait for it to come back to 50. You can look at those. From here now, it had a nice bounce. There's some pretty good volume through there, Chris. So love to see this tighten up here again, like nice little wedge or a little VCP or some sort of little tight pattern there. But maybe we'll get sort of something like this, So sometimes you just got to wait patiently for the setups here. But stock showing some strength. That's what we want to see. So we've got high lows, we've got strength. We just have to wait for the pause here now. So we'll wait for the tightening up there to occur. Doesn't tighten up, we don't take the trade. PGC, Paragon Care. I thought this is one to monitor here, just because. Oh yeah, we talked about this one, big volume down here, moving here. So put that on the list to sort of keep an eye on. Qantas is pretty interesting as well. So this has had a pretty big correction, pretty big downtrend here, pretty nasty. Did I would say broke the 20 here. So think about this whole move here. It stayed below the 20 the whole time here. So this, if you think about stocks in reverse, there, the strongest ones will sort of hug, stay below the 10, but a decent trend will basically sort of on the way up there will basically hug the 20, a pretty strong stock, and obviously the bearish ones here can hug the 20 here. So breaking above the 20 there does negate the sort of the short signal there, for me. But now we've had a pretty impulsive bounce there, some pretty good volume through there as well. So What happened after that was the whole thing just after breaking above the 50, having an impulsive rally taking out the highs. We saw this little tight pattern here, and the whole thing just tightened up here. So again, this is a little wedge in there, little pennant, and then this day here, you would have basically had your little breaking out. You draw your little wedge line in there. This day would have had you breaking out here, that little wedge. So sitting above the 50, little tight little pattern, showing some strength. That's exactly the type of thing. It's probably not the share you'd probably be thinking you'd be buying.
Be doing that, but
yeah. But this is a good little signal here, really. That's sort of we've had you along there, sort of from around about 525, 530.
And what about the volume during that period where it was compressing and coiling and being tighter? What was happening there?
Well, so look at that. Yeah, so the whole thing just, it had good volume through here. And then on the pullback there, the whole thing tightened up here. And really the only day with the volume there was the day of the low. So then you get a nice little spring there and bounce the next day. So yeah, that's pretty solid there. And then, so the thing of the stock is, you see how it trended down here. It's funny. I'm sure if we go back maybe 2 years, it probably does the same thing on the way up as well. Probably hugs the 20. I can see it definitely hugs the 50. But you have to go back a bit further there and have a look there. But potentially this 20 might be the way to look at it here. Once it sort of gets going here, you probably want to sort of see it sort of stay stay above the 20 there. So that might be a useful sort of stop to look at there. That was Qantas there. So CLW was another one to keep an eye on there. Just again, there's that classic little three-wave impulsive rally there. Come back to the 50 and then bounce from there. Just seeing a lot of this, sort of setup here. So and obviously breaking the new high here again. So volumes are up here. So it's funny, we talked about, we go back probably 6 weeks ago, Chris, I did a piece there on the Wyckoff charts there, sort of that, I think it might have been the distribution schematic for the Wyckoff there. And that was all on the property trust. They're all basically sort of, had multiple tests of the low, had the follow through, and then reverse them. We saw big volume at those lows as well, and then they've all reversed there since then. So I mean, it's funny. I think we had Dexus on there, which has had a
massive rally,
nice little rally there. I think it was CLW was the one that there's one at CWH or something. Might have been. There's one around 36 cents there, which I really like there. I think it's already up to about 45, 50 cents or something else. So yeah, so no one likes those sort of sectors there, but sometimes, you learn those sort of Wyckoff charts there, give you a good idea as to where you are in the sort of cycle, and you see those sort of certain behaviours and stuff there. But yeah, there's some good setups there. Before I check out, this is one that I thought was pretty interesting. Chris was Elders there. It's had a pretty nice impulsive move up here, and then the whole thing's tightened up here. Look how tight that is there. So we want to sort of see it, impulsive there, tight here, and then sort of break up there. Didn't really get going in the last one, but this was sort of earnings day here, so it wasn't, again, market was expecting the worst bit like the retail stocks, and they've rallied there. But this is holding pretty tight here so far. So that's what we're looking for. We're looking for impulsive and then tighten up. It's the stuff there. So look, some pretty good lessons in there overall. Just tell yourself, loose is for losers and tight is for winners, and focus on that and try and stay on the right side of the market.
They're very good tips to lead us into the weekend and insights on the charts. So I would say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.
Gary talks about a whole lot of trading strategies. There's a playlist on the right, as well as his Tuesday recordings, which is his weekly report. And he talks about the trades that he's taking that week and how he manages his portfolio. Over on the left is his Twitter or his X handle if you want to follow him there.